Okay, here we go. Yeah, so today we're going to be focusing on just identifying what's happening from a logic flow standpoint, so we can always make the best quality decisions possible when trading. So I'm going to start with just a little bit of a not too much of a recap, but just a quick kind of like what has been happening, because we do always want to understand master timeframes and what's happening on the chart. So master timeframes being one of the first important pieces. And to understand that, we need to kind of see the targets that have been hit. And, very quick example is just if you have a 4 hour, it goes to a 4 hour. So very, very easy way to just kind of look at things. So from the top, we have hit our kind of all-time high or whatever. We've got a break level up here, which is going to be pretty important to break the range next. So nothing I'm going to mark here, but you do have a weekly up there now and a daily. So that's going to be a pretty huge polarized point in the chart. So this is something that's got to be paid attention to. Like you've got a weekly here and you have two candles, so you have that separation. So this will be a weekly break, which is very critical to our analysis right now, and also if it hits and rejects again for another period of time. And I think you would see something very much similar on the bottom of the chart if you were to look. We'll go to a weekly here. Like if you were to look at the bottom of any chart on Bitcoin, you have kind of this origin level that's set, and you hit the bottom of a move, a break level. You have an origin set here. I have this marked as a 4 hour, but creating that origin is a pretty big moment. And then I'm sure you see it on the top side too, right? Like you create that weekly level there. It holds the move. It breaks down. You create another one here. It holds the move. Is not able to recover here after it breaks above, and these become pretty critical points. So that's really important to understand that. Um, you know, seeing, yeah, just move this text out of the way. Seeing when these weekly breaks are created is very important, and we have one now. So a very important moment for Bitcoin's chart to see, like, can we break above this and continue to go? And have you break above this and you back test it to move up. I'm sure there is a ton of back tests on this. I don't know if we'll be able to see the time frames here, but we could start with a 4 hour maybe and see if that even allows us to see here 4 hour. It breaks over, and then even here you've got the break over, and you're trying to hold above this level, but ultimately it doesn't do it on the larger time frames. You won't. There's no way you can see an hourly candles here, can you? Oh, you can. Are you even seeing hourly candles? Yeah, you are. So yeah, very much the same thing. So this is very important for what we're doing right now with Bitcoin. So having that break level is critical. So then from there, we can engineer down some of the other things. So such as daily levels. So if you're going to hit your weekly and your daily is going to reject, you're building your timeframes down daily, weekly, then a 4 hits. It's a form of cycling, right? Like going down in timeframes like that. And really when you hit something on the bottom here, you've got a daily origin here, which is the same strength as a weekly. So you've got kind of this weekly to weekly here. So you've got like a weekly level to a weekly level. So that's really important to know. So that you did create a weekly level here, you did test your weekly level there. Right now we're in a Pandora's box. If we were to go to a weekly on the bottom, we actually, if we do reject this, we actually don't have anything on the charts all the way down to like 50K. Some type of weekly levels down here. So, or even further down to trend. So like if we do reject this trend, you can expect a pretty large move down, either to one of the the range trend here, which protects this range from breaking. So you can go right down to the range itself. You can also go down to the weekly level here. So you're going weekly to weekly level. Trends are levels, just like levels are trends. They're all just levels on the chart. So you can go from this weekly level, if you reject it, down as far as your weekly here. You can go down into this range here to extrapolate, what was this test of polarity? Like, what did this test? Because I'm sure there's some kind of origin level here that a test bounces, and then you get your next test of your next polarity. So you're somewhere in and around these marks here. You'd have to go into the chart and find where that exists, right? Like, and possibly even this origin here that broke over and back testing that. So, your first kind of stop here is like 48K, 48,200, I think is pretty important if you reject this. So that's something to keep in mind for your overall meta on this and your overall master timeframes and what they're doing. Don't be surprised to see this test, goes above it, fails, tries to regain above it again, and then drops down to something like 48K. Don't be surprised. Not saying that's going to happen, but that is one possible scenario, which gives us the understanding that our master timeframe is going to be of those higher timeframes. So like if we stop at this daily, for example, not good. Really the pressure is on Bitcoin right now that it's created this weekly level, to not only test it and go above it, test above it, but also to break cleanly above that weekly level and hold it. It can't just test it and pull back. It can as long as it breaks over top of it. It might have a few attempts to get over top of it, but really the onus right now is on Bitcoin, because if it can't break this level, it is going to pull back to about that 48K mark. So like it's going to have a pretty wild ride all the way down here. And then we start by looking down right now at the daily. You have the daily here, you have the daily here. So I think a lot of this stuff that we did on stream, we can just take off because it's no longer going to be relevant. We are just looking at daily levels at this point, daily here, and then a possible daily down here as the break level, which can ladder this. So you have daily break ladders to this daily break, which can go up here. So this is, identifying good long spots is your daily break. Combo levels below it that makes sense, time frame relevant, interior to the move, so interior to the range, time frame combos that make sense to that. And then so we can just like delete. Let's leave that and find out where it all lies after. Yeah, let's leave that. So that's a good start there. Next is let's find the timeframes and what it's testing right now. So what exactly is it testing here? So you have, you've got a pretty clear, like this is testing some type of origin in here, falls down. I think we did that last session anyways. I don't necessarily buy that this is testing this again. I don't necessarily buy this as a 4-hour level. I'd like to actually investigate further into the combos in here to see what this was testing inside of this. So that's really where I'm going to go first here. Hourly backside. I want to see like where was the polarity in this move? That existed here and that breaks down and then you try to gain this. So really this becomes a polarized spot right here. This becomes pretty polarized because it had to hold this level. So it could be testing this, not testing that. So no, I think you already tested those. So it's laddering off of these. So this tested and it's laddering off of this. So you've at least isolated it to where this move had to hold, the polarity it would have to have, and then the move inside of it. So likely the origin next, because if it's already tested this once, reversed it, it would have to ladder off of this somewhere. So then we can start from right here. Make sure there's no 4-hour origins there, which there's not. Is this an hourly? You have an hourly here that tested as the break, which is also the backside hourly here. This has tested there, that broke. So let's start to look at the hourly trail here. I'm gonna mark this here, and let's just emulate this down to see if it indeed was the hourly level. So hourly level there, tested, fine. Hourly backside here, tested, fine. So then you have your hold level there, tested, next, fine. You have your hold level here, tested, next, fine. So this was a very polarized moment in the charts right here. This was polarity in the charts. So you tested this level, you created the origin from here, and you kept testing it, and then that gets muddled down to these right here. This breaks, or when this breaks, it's going to be game over, and then even further beyond that, it just continuously ladders its move until you have you can see it didn't ladder this. It started to break it right there. It had one pullback on it, but then gets over top of it, hits the next form of polarity, which is up to here, or which would have been right here anyways, and breaks straight over that. So we can kind of confirm that it's a 1-hour trail it's hitting. So that's fine. It makes sense why it would go after a 1-hour level, because these 1-hour trails were the highest time frame on the chart that actually are lining up pretty perfectly here. You do have the 4-hour here that lined up nicely as well, so you can use both. Oopsies, let's go back to that 4 and let's take a look at that. You have this 4-hour here, which it did hit right here, and you could say now hasn't hard closed this. So you could say you're hitting a 4-hour that combos to the 1-hour. That's fine. I don't mind that. Or you could say you're reversing this, and it's fine. It's you're finding a combination level inside of there. Like I don't have a problem with that. I just don't think it gives us accurate data to understand if this is dumping or not. I think those 4-hour reverses are fine, but I think ultimately this daily here is important. So you do have your 4-hour trend, which also broke. I believe you don't have any dailies. You can have a daily now. So now you can make a daily range trend off of this. So really right now, I think what we're looking to do is to expose the higher part of the range. We need to understand where this is going to stop and create trend. And I think that's a pretty important piece here. Can it hit the daily? Will it hit this hourly? I think this is going to be more critical right now to create this. range trend, which is the move is starting to mature. So that's perfectly fine. So you have an hourly origin here. Now, in order for me to confirm that, I want to start looking at hourly origins on the bottom or 4-hour levels, because this could be equal to a 4-hour level or an hourly. So really important for me right now is to confirm, and we're going to do this high time frame down, confirm what levels have been being hit. So that, like, we can see that it's, I would say in confidence, this is not really a 4-hour level being hit. The 4-hour level exists down here. It's not hit. It's hit all the way up here. Fine. You have a trail of 4-hour levels here because technically this hit and held. That's not really what I'm looking for. I'm looking to see, so we can delete that. I'm looking to see if there's any hourly origins that we were specifically targeting in this move. So hourly origin here. Yeah, like I think you can confirm that right there, hitting and testing that hourly origin, which is why it makes sense on the top. I think you can confirm that there, and then you need to start. Okay, so that's also a daily level, which is good, because actually now it's kind of creating that architecture. I don't think there's really any other hourly origins here. So past this hourly origin, what would its target have been? So you do have like an hourly origin right here, right? Or you can even say it's right here. Either way, it's being hit. Technically, it's right here, and I think that's why you see it hit there. So now I want to see what the larger implications of that are. So we've hit a daily level here, right? Yeah, you've hit your daily trend. So you do have a daily level down here, and you do have a weekly here. So like at the first, you have weekly to weekly, daily to potential daily, and then origin holds its origin up top. Had this origin not held, what happens to this move? That's what we have to think about next. Had this origin not held, what happens to this move? So you have an hourly. It goes down to this 4. I believe it goes down to this 4, hits daily trend, and see if it can, hit that 4 and bounce back up. So I think that's a pretty important piece to have on the chart as an unhit level, because that would have been what would have happened had this hourly hit. So I think we can delete that. That's fine. I think we can delete this 15-minute. That's fine. I think we're using larger time frames now, so we can kind of just muddle this down into what we can expect from the masters. So 4-hour level, daily here. So you have a daily origin. This would be your next target, your daily origin here, and it can deep dive somewhere into this part of the range. So now we need to look for those hourly break levels from this part of the range. So that's where you get this right here. So this is really going to be your next target on Bitcoin from my no, it can't be, because you've already laddered that. So you're going to hit the daily, and you're going to dive down to some other type of level. Well, you have this daily down here. So that's, oopsies, I just deleted it. You do have this one here. So this could be your target, actually, if that stops it. I don't think I would use anything but this as a target. But at that point, I think the move breaks. So if this holds, I think it's clearly indicating its intention is here. So the only thing that can stop that is what would offset the hourly from being hit. And that would be, there's no 4-hour that can offset that, because again, you're creating a daily trend. So the 4 hours, the only thing that can offset that. You have this trail from here to here. So this is it. This is it. And I think you're going to likely see a scenario where you back test the backside on the 4. And if the backside can't hold, I think you create a scenario where you test this backside. And if this can't hold and you start going down to the front side, I think you're potentially going to be looking at dumping the move. But really right now we need to look at what can offset all of this, and the 15-minute can also offset this, because right now this isn't a break, this isn't an origin, it's just a break. So if we are to go and break above this, I think that's where you have to look at your 15-minute levels. So now we have to create, and I remember in this chart that backsides were holding up this move. So we're just going to go here, and we're going to start looking at which front sides and which backsides are hit. So you got this here, and this backside is obviously way too high up in the move. This backside was hit perfectly, because I remember looking at this and noting that backsides were polarity in this move. A backside hit here, which is going to lead you to right here. That's not tested. So you have this as a target to offset that as well. This backside was hit there, tried to hold up the move, couldn't do it. Goes after a front side, gonna drop to its next backside target. So I think that's really what you're looking at right now. I think you're looking at a move from here to here. Whoa, that's a lot of money, 8%. And the way we get there is by this. Was this hit or not hit? And why is this? I thought this was an hourly that we had marked out. This is an hourly. This is not hit, is it? No, it's missed actually. So we actually have to do it from this one. And the only reason I didn't make this adjustment before was because I saw that there was 2 there. So like it doesn't matter which one. It's all going to be, it's still the same target. It's just like a couple candles forward. That's why I didn't, I'm not stressing out about that. So
You also got Origin
don't
Bitcoin.
think we need this there at all. So we don't need that there. Nothing here, nothing there that I care about. That's fine. That ladder's the move down to here. Yeah, it's still the same trail. And now you're left at the hourly origin to break the move. So now what we need to do is we need to just try and lose this. And what is this hourly doing here? So that was okay. That's polarity there. Do you have anything else here that can reverse? You do. You have an untested here, actually. So getting below this is important right now. This is going to be your polarity on the move right now, like your rejection is target to get below this, right? So that's going to be your rejection on the target from a global standpoint against the current range, right? Which is also going to be propagated by this. But like if this holds, obviously, I think we're not done the move, which is all going to be synonymous to here. Because that can be a reverse for the move, but then you're going to have this here. So this is actually not needed because it didn't move straight down. If it moved straight down, that would be needed. But I think there is a potentially decent short here. It's just, how do you get into this by ensuring that it can break its move? So, first you use your trends here. So you don't really have one there. Assumingly, it's going to be a 1 minute level here. So like trend to this to this. Like assumingly, it's going to be here. And you break that to get to this part of the move, which is going to give you reverse here. So you're going to have to lose this in order to break the move. So if you're longing, it should be here. If you're shorting, it should be the rejection against this holding and rejecting again against that below that level. So like we have the hourly there, that holds it up. This becomes your next time frame down to hold it. So you get below this, you hit that, and then you find some combo to this that it can't get past. And that's where you start to look at taking your short. You have a backside here. So I'm just going to walk through this. That's the 5 minute. The 3 minute goes to here, and the 1 minute is also backside here. So, I mean, you could go backside 1 minute here. You might not get it though. You might not get it. I think you have to just kind of stick to maybe your 3 minute combo here. I don't think you're getting that though. I think you're best off in this scenario, even 5 minute there, combo backside. I don't know if it makes sense to get deeper into this move. I actually almost like a short right now, 30% difference. But then at that point, it breaks the move. I have no 1 minute there. I think, yeah. I think you boil this down to like, this is the trade right here. And I think that's exactly why it's holding it too, because it's going to be rejection as a target on the bigger part of this, right? Like that's, yeah, like it makes sense. A 15 minute there. Do you ever over 8%, do you potentially miss this trade? Although there's a 29% pull on this. So like that 29% pull, if you're going to this, I think you can only take this right now, 46%. I think you can take this right now and never again. Like if you're shorting and you're doing this right now. I don't think you can take it as the re-up on the trade. I think you're just going flat for this right here. I think you're just taking the flat entry right there. And I don't think you're trying to skim 8% to get the combo level. I don't think it becomes worth it. And I think right now, if you're taking this, you take it right here. You take it right here and you ride it down to that 15 minute. So like this is where I would look to identify my target on the bottom side, engineer it from the top, because at that point, if this breaks, we are simply going to start targeting this daily level in order to make a daily range trend. So from here you've got another 3%, which is very viable as well as a target. But I do think this is decent right here. I think this is a good trade because the risk to reward for what it is, it becomes a very easy trade where it does this. It hits it and it breaks it down, or it goes above it and gets above this. And when it gets above that, all you do is you simply take your exit back on that. And you have kind of like this trade that doesn't have a lot of risk, but you're taking all the benefits of the trade there. Like you don't have a lot of risk to take this trade, but you're ensuring you get entry here. So like hopefully it doesn't just move straight down and people just miss this here. Yeah, let's hope it's not a mistrade over 3%. That sure would be that sure would suck. I think if this candle doesn't go up and test it in this next 1 minute, I think I might adjust to here as the backside and even front run it to here and even go a little bit in front of that. Like I would go something like this and then let that hit and pull that back. And I might even just take it down a bit more because I don't know if I'd really be willing to miss this trade over such a small margin here. Like I would maybe want to go something like this, because then at that you're just trimming off 2% to ensure entry. So you're either entering here or here on this to move it down. And this becomes very simple because if you enter here, and it goes like, if you enter right now and it goes above this and you just get out on the back test of this if it gets above that, right? So like if it goes above this and hits like this, you just get out. If it hits this level, you can see if this holds before you get out, but you're limiting losses in most scenarios here. There's that. That's perfect. So that's good. That's that one candle allowance that we wanted to have. So like that's perfect. Perfect entry. Targets hit perfectly. Let's see if it pulls it back. And if not, we just get out when it breaks over the origin. We can get back out on the test of this level. You can give it a little room to breathe here. Like you can let it hit this above and then just give it like a little bit of room to breathe to see if it's going to hold above this or not. But yeah, right now I like this as the trade setup. A lot of times it is going to try to break over this. It's going to fail it. It's going to move down, or it's going to break over top of it and then therefore back test it. And what do you really like? What are your losses on that kind of a trade? Like it's pretty minor. And I think you can probably get out, like depending on how it looks, a lot sooner than that too. But one of the key moments here is breaking over this because you've created polarity right at the level, and you need to you need to break above that and hold above that in order to stay in this trade. So let's see how this kind of plays out for the next minute. And at this point here now, you need to use this level here to gain this. This is your target. If you start to stop here or here or here, you get out. But rejection as a target is going to be like the first big one here. This is going to be the first spot it hits and pulls. Not necessarily going to hold it, but it will have a little pull there, just like you just saw. And then this is really going to be the bigger target. Like it needs to gain this. If it can't gain this and it starts closing above this, like what it's trying to do right now, you get out of the trade, because then it's going to try to gain this as rejection as target. So right now you're pinned between these two levels inside this trade. If it gets above this, like you could just have your stop loss rate at that. There it is. Stop loss gets hit. I would stay in it personally a little bit longer. I would like to see what happens here. But these rejection as targets and like gaining this is showing you that it's still breaking up, right? Like if you start closing over top of this level, alarm bells should be going off, right? Because now, whereas to where rejection is target, or the whole level here, or rejection is target is here, either one of those stop it, the move can't move down. And you're going to create the same thing here. This is going to be rejection as target from the entry on the trade. And if you stop here, you get out of the trade immediately. Like I would give this one more rejection as target, because at this point, rejection as target here, if this creates a white candle and it cannot get below it, you have to get out of the trade, even if you're like, oh, but I'm still in profits and I want to use a stop loss. And even if you're here, right? Even if you're here and you're like, oh, but like it's so small, but that's not the point, because this thing is going to start boosting up because you're creating inner polarity on this. And again, you're seeing it here. Like it needs to get under this level. You need to start thinking about exiting this trade. You've created a white candle. It's okay. Give it one more candle. But now at this point, I'm like, okay, you need to start thinking about getting out of this, because now you have a razor thin line. You have polarity deciding this move. So you can actually engineer this to see, are we moving up still or are we moving down? And you've boiled it down to these two moments. It's having trouble gaining this, and it's had trouble gaining this. Now the line is so thin that you're just going to sit here and do exactly what you're doing right now, which is struggling between two finite levels to see, are we moving up or are we moving down? So like which side gains, and then you instantly make your decision here, because you should still be in this trade, but you're boiling it down and reducing it down to the inner points of polarity that are deciding, can this inner range snap up or are we moving down? And this is how we do it, right? So you've got 18 seconds. You've got 18 seconds, and hopefully it doesn't reduce down to this. Attempt to run for that origin. Hopefully it doesn't hit. You should, still in this trade. Hopefully it doesn't hit and we just failed down. There's the hit there. And so that's where your polarity snaps. So now your exit is on the back test of this. So now you have to take a small loss on this. You have hit this level. So you can wait to exit here. You can go for a break-even exit. You can go for this. But really right now, you've been shown that the move is trying to break up, because now your polarity is existing. It's not even polarity anymore. It's just testing the final level. That's quite a big difference here to this. I would get out back on the creation. Like I would get out like right here, just limit my losses to this. You're going to test this more times than not here, back test this, unless you just boost straight up. But that's what it is when you're playing these highly polarized moves, where it's like, okay, well, we could move down 8%. There is going to be a struggle like this. Like you saw it try to break down here. It will try to create the next breakdown. Now you have to make a decision if you exit here to preserve capital, or if you want to see if this can gain this. You could also do a bit of a hybrid system if we zoom in here, where you see if you move down, if you touch this and it starts to become an issue. I'll call it an issue. It starts to become an issue. Then you get out of the trade. If you bounce this, you get out of the trade. If you just gain this, you can stay in, right? So yeah, this is really where you should be left off with this trade. Is you make a decision on the back test of these, and you hope that it just doesn't fly over this, because again, rejection as target is going to be a real thing here. This is polarized the move down to this point. If this can't create something, you're moving up. You're moving up. So right now, if the candle stays white, you're here. I don't think it will, but right now this is a target. So there's no more rejection as target. This is gone. There's nothing left. So if Bitcoin starts to hold, it's breaking up, and it's as simple as that. Right now it's this. It has to gain this. It no longer has this. So once it gains this, it's gone. So like you have to decide between all worlds here when you're in this trade, but at least you're doing it from a point of knowledge where you can understand where this thing is breaking up or down. Because as current, you're at a 7% loss. So if this is making your stomach weak, get out. There you go. Get out right there. This will be the moment, though, that decides right here. Well, I mean, you could technically backside touch and move up, right? But this will be rejection as target 1. This will be rejection as target 2 now that you have 2 candles. But really, gaining one of these is almost game over for this. So, this would be entry for people who think, oh, it's shorted. I missed the last 1 minute level. I need to get in here because that's going to be the next best entry. They would be correct in saying that. Technically, you could try to front run something like this as like a slingshot entry, which is just like guessing, but we're not using technicals on that, right? Yeah, and if you're squeamish, there you go. You just got break even exit right there. Or like if you put it on the hourly, I'm sure it's going to test, or even right here. Like I said, I would get out there if I was squeamish, and that's exactly what you're looking for, is kind of that front run of the level. So like that's exactly where you would get out if you were getting out, somewhere like this here, because this is death for the trade. Alternatively, now we do have this again. So you're just constantly creating polarity in this trade to see, are we breaking up, or do we have the ability to break up or no, right? Backside test, like again, you should be out of this trade if you're squeamish on this. I would be, because I don't like diving 30% to be in that position. If I wasn't out of this trade by now, I would probably get out at rejection as target right here. I would probably just limit my losses to 6%, let this get hit and get out there. Like right there, I would have been out. Like I wouldn't be in this trade. I want to make that clear. I would have taken this trade here because I like the implications of the long term, but then I'm really focused on limiting my losses once it doesn't play out exactly how I want, right? Or again, I would have been out right there, break even. But I would not be in this trade sitting here hoping for the best, because right now at this point, what we're seeing is what the polarity was trying to create down has not been able to execute our expectation in the moment. And now we're just looking for the next best possible spot. Because remember, the whole part of this trade was to onset to lose this, which is now this. So you have, like, if we don't move up in 1 minute and 55 seconds here, and you do have a new 15-minute target here, look, you've laddered this, you've got this 15-minute target there is some relevance to sit here and say, like, I can stay in this trade, or I can look for another entry, maybe slightly above this, to go above that and lose the 15. But if you were in that current trade, I would say the risk is pretty high. However, we do have in 1.5 minutes a 15-minute level rejection as target to gain here, which is a very clear move forward. So if we gain this target off of hitting this hourly, you've hit the hourly, you've gained the 15. So now you're starting to create that expectation where you would, you start looking down here and even lower down in here. I think that scenario where we look lower down here has been a little too muddled here to go after that. I think you would have needed to do exactly what we said here and create that moment here in order to have that. But you've also got a 1 minute level here. So you do have, let's actually double check that, because we're doing this the wrong way. Never be a 15. It can't be a 5 yet. Can it be a 3? It can be a 3. So you actually have a 3-minute level. So you should also look for 3-minute levels on the bottom to offset this trend. So if this trend starts to dump and you can't gain this, that's another spot there. So let's delete that. Let's delete that. Keep this hourly. Let's look for the 3-minute offset, which is here, because that's going to be this target here. God, you are so close to that. And also the other part of that above trend will be, can it reject here? So this is becoming a reality now too, or possibly this. So like if you gain this level soon, it's kind of like, uh-oh, right? Be very, very, very mindful, because not closing this candle blue, if you were in this trade, you'd be like, yes, we're going blue. This is not a good thing. This is not a good thing right now. You've created a pretty easy 3-minute level to gain. And this being your 3-minute level, you only really need to gain one of them. So you're not exactly making this great case for yourself to be, just because it's moving down doesn't mean anything, and does this create a 5? It does. It actually creates a 5-minute level. So actually your target becomes here. This becomes your rejectionist target. You see how it's moving up so quick now, because it has very easy levels to gain. And that's your rejectionist target in the move, because that's going to be kind of like your final point in this trade to sit here and say, you could, in theory, create the 15 here by hitting it twice, but that's gonna take a lot of juice to hit this once, pull back, and hit it a second time to make it an origin. That's gonna take a considerable amount of effort. And by that time, you would have tested your 15, offsetting it by a 5. You'd literally be bouncing between this and this level for the next hour or so. So we might stay in a range right now that is here. 64%. Is it enough to justify that 5-minute entry? I think it is, actually. I think that's enough to justify this as an entry on the trade. I think you've got 4 minutes in this trade. What I would like to see is, I would like to see this clearly come up and test this after we don't gain this for a few minutes. Like I would like to see this move down a little bit first, hold some other level here, and then come test this and then move down. Let's see what happens here. And if you were stubbornly enough to still be in the trade, then good on you. Make sure it doesn't hit the 15. But that's a trade I would have taken. I would have managed it. I would have exited break even. And if it's moving down now, that's fine. Our job, the best thing we can ever do as traders, is expose ourselves to an infinite amount of high quality positions with very clear outcomes, where we can get out anywhere from a 0 to a 5% loss. And if it only works out 1 in 10 times, and you were to lose the maximum amount, which is 5%, you lost 45%, and we engineered it as 800, call it even half. We engineered it as 4. Call it 1%. I don't care what you call it. Call it anything above 45%. It's winning trades. So engineering high quality trades like this at a level where we're using logic flow and master timeframes becomes a very easy way to be. Well, I don't want to say it's an easy way to become a profitable trader, but it gives you a very stress-free experience, because you're constantly taking points of polarity and high quality positions that you're exposing yourself to. And like, look, even right now, if you're still in this trade and you're like, yes, I was on the winning end because I held down, like, no, you're back to break even. At this point, I would be exiting this trade still all the same. I wouldn't be sitting here trying to get in. It didn't play out to my exact specific. It went for the greedier 1-minute level. It's now creating these here. I believe that it can try to target something else before moving down completely, like even this 5-minute level, 5-minute backside here. You've got that there. Is there going to be a 15? There's no 15 yet. You still have this as rejection as target. Like, it's too early to start celebrating this move, because you got in. Even if you got in at the 1-minute level, I would almost treat this as a scalp from here to here. 48%. Oof, that's low. That's low for that kind of risk. Well, it's a 1-minute hold level. So like maybe you would just hold out for the 58%. You could also hold out for the 40%. The difference between 40 and 58% here, I think, as a scalp trader, this hitting the reverse already nullifies the origin as target. So that already nullifies it, because now you're going to try to run up again. You're break even, and this would be a spot right here. This reverse right here would have been a spot where you would try to long this for the break as well. So like, this isn't even like really necessarily a bad spot to have longed from, even if it's a scalp for 10, 15, 20% there. Like, even if that, it's fine, although not a trade we took. Is this worth to take 50% here on this? It's a tough one. 50% is kind of like really crappy for a 1-minute level to hold like this, but at the same time, I just don't think it's reached its final target on top yet before taking its move down. But yeah, like possible for sure. Possible. I think you need to think about this and make that decision. 50% here. You've got what could be an origin here, and this would protect it. So I think with this 15-minute, I would aim for a 1, and if it stopped at the 15, I would mark it out. I think that would be my strategy in this trade had I been in this still. And if it does go down, I just don't think I would be in this. I would be going for this here, which technically can reverse here and then create a ladder. So this can create it all the same as this does here. but a 5% difference in price, I would go for this 1 minute reverse and not this, even though if that could deep dive. And then that's another thing you can measure. You can measure the deep dive here to 12%. Is it worth getting this? Yeah, because in no scenario, if you enter this trade here, if you enter this trade here, or if you enter this trade here, in every single scenario, you either break up and lose the level, or you have broken up and completely broken up. So these are either all wrong and you're getting liquidated no matter what level you're taking, or they are all pulling back and giving you a chance to get out before it moves up again. So the only bad outcome in this to trade is if you were to trade even the highest level or this level and your trade misses, because this information here, and this information here, they literally give you the same outcome. It's just, are you willing to skim for 11% and possibly miss the trade? I would not be willing to miss the trade over 11%, because in any scenario, these all liquidate. There's no scenario where 11% covers the spread to the next level. Like if 68% is liquidation, there is no scenario where you're like, oh, 68 is liquidation, but like if it was 78, I would have been still in this trade. No, this is a polarized part of the chart. It's going to move up regardless. So there's no scenario where it makes sense to take the highest level here from a risk analysis standpoint. You will just end up missing your trade and getting frustrated. While being like, well, I could have got 11% more. You're not going to care about that when you're looking at 400% profits. You're not going to be like, oh, I could have made 411%. No, you're going to care if you're in the trade or not in the trade. And they all lose polarity here, and they all move up to liquidate, or they all move down regardless of you could have got 11% better entry. That's ego trading. That doesn't matter. We're here to engineer good quality positions that have a net outcome on a regular basis, and that's it. So with all of that said, let's see what happens in this trade.